The Australian dollar, often called the Aussie, is taking a hit. It's been losing value against other major currencies, particularly the US dollar. This decline has folks worried about what it means for their wallets and the Australian economy. But hey, don't panic. Let's break it down. Currency values go up and down. It's like the stock market, but instead of companies, we're talking about entire economies. When the Aussie dollar falls, it means our buying power weakens. Think of it like this. That trip to Bali just got more expensive. But why is this happening? There are a few key factors at play, and they all tie back to global economic conditions. We'll explore those next. One major reason for the Aussie's decline is China's economic slowdown. China is Australia's biggest trading partner. They buy a ton of our stuff, especially iron ore and coal. When China's economy slows, they buy less. That's bad news for Australia. Think of it like this. Imagine your best customer, the one who buys most of your lemonade, suddenly decides they're cutting back on sugary drinks. You're going to feel the pinch, right? That's what's happening with Australia and China. Less demand for exports means less demand for Aussie dollars. It's a simple supply and demand issue, and when demand falls, so does the price. Another factor impacting the Aussie is the difference in interest rates between Australia and other countries, particularly the United States. The US Federal Reserve has been raising interest rates to combat inflation. This makes the US dollar more attractive to investors. Think of it like this. You have some extra cash. Would you rather put it in a bank that offers you a 2% interest rate or a bank that offers you a 5% interest rate? Most people would go for the higher rate. It's the same with currencies. Higher interest rates attract investors, boosting the currency's value. The Reserve Bank of Australia has also been raising rates, but at a slower pace. This difference in interest rates makes the US dollar more appealing, putting downward pressure on the Aussie. Section 4. Commodities. Riding the roller coaster. Australia is a major commodity exporter. We're talking iron ore, coal, gold, you name it. The prices of these commodities can fluctuate wildly, and that has a direct impact on the Aussie dollar. When commodity prices are high, demand for Aussie dollars increases. Everyone wants a piece of the action. But when commodity prices fall, so does the Aussie. It's a wild ride. Recently, we've seen some softening in commodity prices, which has further contributed to the Aussie's decline. It's a reminder that our economy is closely tied to the global commodities market. Section 5. The mighty US dollar. A safe haven in uncertain times. The US dollar is considered a safe haven currency. When there's global uncertainty, like we're seeing now with the war in Ukraine and rising inflation, investors tend to flock to the US dollar. It's seen as a safe bet in turbulent times. Think of it like this. Imagine a storm is brewing. Would you rather be in a sturdy brick house or a flimsy wooden shack? The brick house offers more security and protection, just like the US dollar in times of economic uncertainty. This flight to safety strengthens the US dollar, making other currencies, including the Aussie, look weaker in comparison. It's a classic case of supply and demand playing out on the global stage. Section 6. Looking ahead. What's next for the Australian dollar? Predicting currency movements is notoriously difficult. It's like trying to predict the weather. There are so many factors at play. However, by keeping an eye on key indicators like China's economic growth, interest rate differentials, and commodity prices, we can get a sense of where things might be headed. The future of the Aussie dollar remains uncertain. It's facing some headwinds, but it's also a resilient currency. The Reserve Bank of Australia is closely monitoring the situation and will likely adjust monetary policy as needed. In the meantime, stay informed, diversify your investments, and remember that currency fluctuations are a normal part of the global economy.